Nigeria's equity markets closed flat on Wednesday as the all-share index gained 0.02% to close at 33,357.16 points, while UBA was investors' choice for the day, trading over 37.2 million shares valued at 32.9 million naira, while over 306 million shares were traded in 5,807 deals. Well, joining me from Diamond Bank for a look at the banking sector ahead of earnings release is Kayode Tinuoye, a strategy and business officer. Well, thank you so much for joining us, Kayode. Well, Kayode, Nigeria's central bank has just reviewed its policy on capital adequacy for lending to public and oil and gas sector. I mean, it's 100% rather for the public sector and 150% for oil and gas. Now, that means if a bank is lending 1 billion to the public sector, it has to have 2 billion in capital. Now, how are banks reacting to this policy? I mean, starting with the public sector lending, as it impacts the public sector in any way?
I think the banking system is currently looking at that policy and seeing how they can put in place compliance procedure to make sure that they do not breach regulatory instructions from the CBN. We might begin to see some banks rejigging or restructuring their loan book in order to comply to this policy.
Now, if it does restrict lending to the public sector, say it does, now, do you think this will get some state governments to issue bonds more as an alternative to borrowing from banks?
Yes, I think so. When you look at the current exposure of the banks to the government, state governments, recall that it's only the state governments that the CBN is actually bringing out this policy to restrict lending to FGN. Loans to FGN is still attracting zero risk weighting. For the state governments that have loans with the banks, as at Q3 2012, the total banking exposure to that sector, to state governments, stood at around 7%. The banks will need to look at that again and try not to breach the limits set by the CBN.
All right, now, how is this going to impact lending to the oil and gas sector? I mean, we know that's the major sector here in the country. I mean, with the policy stating a requirement of 150% capital cover for lending. Yes,
that's going to affect the sector significantly, because when you look at some banks that have exposure greater than 20% to the oil and gas sector, now lending is going to be restricted to that sector, except of course when the banks now boost their capital adequacy, trying to get more funds to be able to lend to that sector.
Well, do you think this will get the oil and gas companies to come into the capital market? I mean, we know Owando did a rights issue this year.
Yes, most of the funding for big ticket projects for oil and gas investment in Nigeria has come from offshore because of the limited capacity of Nigerian banks. The capital base has been significantly increased, but when you look at the potential of this sector in terms of the imminent passage of the PIB, we see that that will open up a lot of investment opportunities for the oil and gas sector. And we will see banks that have risk appetite in that sector will begin to shore up their capital base in order to boost lending to that sector. So I think the banks still have capacity to lend to that sector as long as they can shore up their capital base.
Well, we see all this. It's it's to encourage banks to lend more to the real sector. Do you think it would work?
Yeah, I think it's the intention of the regulators is to regulate and reduce the risk of concentration in banks' portfolios across sectors of the economy. When you look at the scale of lending for Nigerian banks, manufacturing, oil and gas, and general commerce actually rank between 1 to 3 for most banks. And now when you restrict lending to that sector, it makes banks look at their portfolio again and look at sectors that are key. To the growth of the economy. We have a agri sector. We begin to see, we may see banks focusing more on the agri sector. We may see banks looking at retail sector to lend more, including SME, which you and I agree that there's a significant funding gap in that sector.
All right, finally, what are your broad expectations for lending growth this year? And, what for you, are going to be the key drivers?
I didn't get that.
What are your broad expectations for lending growth this year, and what for you are going to be the key drivers?
Well, I think lending growth will not reduce significantly this year. We've seen banks give guidance about 15 to 20% growth in loan book. What we will see is, like I said before, a rebalancing of loan portfolio to sectors that that are under funded currently in banks' books. I think the banks still have the capacity to lend and increase lending to various sectors of the economy, but then they need to spread the risk and balance the portfolio.
All right, in a nutshell, what are your stock picks in the banking sector?
Well, I think the top tier banks and a few middle tier banks still look good fundamentally. We've seen the market do well this year. A lot of the gyrations that we've seen have come from profit taking and not necessarily a deterioration in banks and in the market fundamental. So I think FBN, First Bank, still looks good fundamentally. GT Bank still looks good fundamentally, and a few other middle tier banks like Access and the rest.
Well, thank you so much. I've been speaking with Kayode Tinuoye, a strategy and business officer at Diamond Bank.